Hi there. So I wanted to share this option trade on Meta. I planned this trade on Sunday. Today is Jan 5, yesterday, Jan 4. And I actually wanted to execute this trade today, thinking that Meta would be trading in the 650 or below. But today the market zoomed up, at least for some stocks at least. And but who knows? Maybe next 2 days, maybe Meta falls and I might get a chance to execute this trade once again. So that's why I wanted to share this trade with you. This is a weekly secured put. This expires on Friday, Jan 9. I actually did a similar trade, and I collected about $1,000 premium 2 weeks back at the same levels, exactly the same trade. So that's why I wanted to share this. Hopefully, I can do this again uh, tomorrow or the day after. Okay, before we go any further, this is the legal disclaimer. I am not an investment analyst. I'm not an investment advisor, financial advisor. This content is purely for educational purposes. Options and any securities trading involves risk. Please consult a financial advisor before you uh, take any action. Okay, why Meta? So Meta, as you know, is one of the top three dominant social media platforms. The other one is TikTok, and uh, the other one is what we are doing right now, right? Uh, YouTube. So Meta is actually moved significantly from a 52-week high. It was somewhere in the 800, I believe, and came down to 570, 80. Then it climbed up. Now it's around 650. So it's a comfortable place. I analyze companies on a fundamental basis. That means I look at ratios, financial ratios like price earnings, and Meta is now at 22. For a company that is growth, it's a growth company, right? Meta and all these Mag 7, they're quite growth companies. Some of them are maturing, yes, but they're still growing. Uh, a price earnings level of 22 is very attractive for a company like Meta. Tons of free cash flow, right? But all these Mag 7, except Nvidia and Apple, Nvidia is the recipient of all the free cash flow. They generate a ton of cash flow, but now they're in a very capital expenditure heavy cycle. But even with that level of capital expenditure, Meta still generates a lot of earnings and cash flow. Okay, so that's the fundamental case for why Meta. Now let's look at the trade itself, the options trade. The strike price that I was planning to do was at 650. Right? Remember, I can get the same, exactly the same trade probably tomorrow, Tuesday or Wednesday. But today it went up to more than 660. I would rather wait than rush into a trade. Patient space. So the strike price is 650 and the expiration date is Friday. It's a weekly option. Just one contract. I collect $1,000 premium because the premium was $10 per contract. Times 100 is 1,000. And as usual, I put a limit order. I patiently wait till it hits that premium and the options contract. It's a sell to open. Right, you're opening the sell position. You're free, of course, to close, right? Buy to close in case you feel that it is attractive at any point, but otherwise you let it ride to expiry, which is usually what I do. But many people advise that it might be better to close. If it is attractive, it might be better to close sometime Friday, just before 4 o'clock, in case some after hours earnings news comes up. Okay, that's all for this video. Keep watching. Bye for now.